We're going to switch over now from the Russell to the S&P 500 and extrapolate from that as to a similar occurrence. So if the peak is coming in here as we expected, and all of these yellow ovals that you see are the corrective zones in there. You could see this yellow oval right here where these cycles came down and nested right here, and then this period right over here. We projected in January it would get up to about 1817 to 1820. It got up intraday to 1824. It could certainly go through there. We're looking at the fib extension zone off of the daily chart to get those numbers. And then if it fell, as we anticipate, equal to that of the Russell, and maybe it won't be quite as much, maybe it'd only be about a 10% move, well, that would get you down into these areas right over here. That's 34.35, 34.25, right around over there, where we think the correction is going to come. Yes, 350 to 400 point decline in the S&P 500, which would not be very much under these conditions. We've had up here for all this time, the pattern suggests stock market holds up into January and big risks through early March. Well, projecting a 10% decline is not big risk. It's just simply a modest correction. And when you look here at these corrective periods where each of these cycles nested, as we're looking at right now, each of those brought pretty significant declines. Of course, this was a crash, significant decline, and 10% would not be that excessive in here. And it's due. It's due to come right now. And as I showed you in the Russell, maybe that one, which has been guiding the market up, will be the one that begins to bring the market down. Now, market up today on Friday, but the Russell is flat. So maybe it is beginning to stall in there. NASDAQ and the stock market still holding up right now for gains on the day and these gains on the week that I talked about earlier in the show. So for the S&P 500, we're going to look for some waffling around at these price levels, and then sometime in the next 1 to 2 weeks making that top and then beginning the corrective process that we see in here towards that major 23.6%. If this gets a little higher, these will move up a little bit, but it'd be pretty reasonable to expect 34.30 to about 34. This is the 50% here, which is 35.10 approximately. That would be a best case, 35.10, and this is a more likely around 34.30 on the downside as we look here over this next 6-7 weeks is what we're really projecting out for the S&P 500. So correction of some 10%, maybe 12% in the Russell, that would be, in our opinion, modest and very likely and very consistent with money flows, and that's what cycle analysis shows you. Essentially the flow of money. Momentum in here, as you can see right there, still giving you strong signals, and it's going to have to be rolling over, which would take some significant downside movement to give us that sign that this cyclical corrective phase was in play in some significant way. That is a look at the S&P 500 as we look at our cycle analysis in here, and very, very busy charts with a ton of important information in there. Yellow phases are corrective phases, and we're about to enter into one of those sometime in the next couple of weeks.